We are live and back in the office just after 9 o'clock, March 30th, right before the end of the quarter, which would be Tuesday. It's been quite the nasty March. I think we're down 4 or 5% for the month. Um, let's see. Let's look at the we've got a little bit of a futures move this morning. S&P futures up about 0.77%. S&P CFD up over 1%. Had a little bit of a flush lower, open back up, just kind of fighting into the last 2 day sell off, which was reasonable. CFD just above the 7,000 handle. I mean, we've had a 10% correction on the S&P from the CFD standpoint. Now, if you go to the opening bell, closing bell, S&P 500, you trade 9:30 a.m. to 4 p.m. Eastern time. We peaked out right around the 7,000 handle. We have fallen 9.22%. So, couple of interesting factoids. Let me share the screen here for. Let me go. Deanna, are we good on screen share? Hang on. All right. Chat's up and running. Yep, we're good. Okay, cool. Thank you. Chat is open on Zoom. Chat is open on YouTube. YouTube.com/Chris Pulver. Anyone that's watching last week knows that I was traveling or wondered, like, why am I just showing myself on my phone? Because I had only a laptop and a 1-year-old child. So that was fun. Carter obviously didn't let me work all day every day, so it was a enjoyable couple of hours. We went 5 for 5 last week, 5 winning days, despite 3 days of travel. No problems. We just stick to the plan, stick to the process. It all worked out nicely. Made some good profits last week. Had some bonus profits last week because of the old defense trades. So daily profit play did very well. Engineered options. We're going to see what happens. We have some stacked orders coming into tomorrow's expirations. So here's the deal for today, everybody. Daily profit play as usual, 11:30 a.m. waterfall income. I'll also be looking at new trades for the week, which would be in April. What's our April expiration? April 6th. So we're going to put on some new engineered option trades. We have some trades that expire tomorrow with end of month. It's also end of quarter. We'll see if the market can muster up any rally, see if our defense kicks in. It'd be lovely to see a profit trap by tomorrow. If we land one profit trap, we essentially wash away, all risk, which is a good thing. I'm not saying I want a break even result. I'd like to make some money, but hopefully we'll see if the market can hang in there. I know that there is a JP Morgan college trade. I've talked about this a lot last year. Big number at 64.75. We'll see what that looks like on the gamma profile today. If it pops up for ultra short term, which would be today, or 0 DTE, or pops up on the scanners for this week. Let's see what else. We had some winners in pinch point last week. We hit that target in the S&P. I'd mentioned this before. We saw the last 30 days, S&P, DIA, QQQ, IWM, all pinched. We obviously had some breakouts. We had some profit targets. Nice winner. Last week on Friday, this thing was showing what's 470 out of a $5 max credit. So showing 94% of max credit. Lovely profit. I took profit at the mechanical spot, hit my take profit at 50% like it typically does. That's how we're winning 85% of our trades on pinch point. We just continue to see good trades, good setups. We've had some direction. That's what we need. I really haven't cared what direction the market's been moving. Obviously, I don't want the market to keep going bearish, indexes especially. And I wanted to talk a little bit more this week about crash insurance. I think one thing we can look for, the VIX is still at 30. 30. Okay. Traditionally, the VIX at 30 is a pretty good time to sell some premium. The issue is we used to say this about 20. 20 was like, okay, either the vol suppression is going to get pretty serious here. We're going to see 20s go back down to the 17s or 16s. But now the entire year of 2026, we've essentially been elevated greater than 20. We've had a couple flare-ups into the 30s. Here's a 35 VIX. Here's a 31 VIX. Here's a 31 and change VIX. 2022 did the same thing. And the entire, 9 or 10 month downturn that the market was making, lower highs and lower lows in 2022, that came with VIXs between 20 and 40. So the VIX would essentially spike up towards high 30s and 40s here, and then pull back, go back to low 20s. spike up again to 30s and 40s, fall back right on the rally, spike back up to 20s and 30s, did it again and again. So all year long, we just had an elevated VIX 20 plus. We didn't have a VIX event per se, where we didn't have like a break of, 50, 60 crazy VIX numbers, right? Like we saw during Liberation Day, like we've seen during some other episodes, Great Financial Crisis, COVID, things like that. So major rotation. I'm sure you can read headlines both ways that the market's too complacent, everyone's too bullish, earnings haven't been adjusted lower. Maybe, right? But I think this market's gotten a lot of people's attention. One interesting factoid is this market, timer wise, I'm going to put a timer right here at this vertical line. This closed on the daily time frame below the 200-day moving average. And I hate to make my charts even messier, but I'm going to. So make this real thin. Okay, that little vertical line essentially starts the clock. Okay. And the clock is we have about 4 weeks for this price to get back above the 200-day moving average to resume any type of bullish trend. Because if it stays below here for 4 weeks, there's a lot more damage that is likely going to come our way. So this whole thing with Iran, the spike in oil prices, everything that's been going on, that's been driving traders crazy, making headlines. We need to see if price will get back above the 200-day moving average within 4 weeks. So markets on the clock. We would be going out probably 20 trading days, give or take. So candle wise, I mean, we don't have a ton of space here, but if we go out 20 bars, that's essentially 4 weeks. Okay. So let's block this in and see where things are going to be. Over the daily charts, see if we can get 20 candles in here. And are we back above the 200-day moving average? If so, okay, well, then we would have market created some short-term structure in here. We flushed down a nice little 3-day drop. If the market can fight back over this week, right? Set up a little posturing to get back above the 200-day, higher low to higher high. Again, I think this is a good opportunity to de-risk and not say that everything is great and everything is back to normal. This is the resumption of the big bullish trend. I think de-risking, de-leveraging is an excellent decision. That's what I will be doing. 6750, 6800. I will be taking some profit. I will be lowering my beta weighted delta. I will be taking some trades off the table. Okay. I will still stick to, plenty of trades and fulfill services, and we'll still grind. But as far as like the big positions like Project Options Edge, that will probably see a lot of trimming. And again, not closing for losers, but trying to say, even if it's okay, we expect to make $150, we're up 30, 40, $50. I'm just going to take the profit. Okay. I hate to sacrifice that profit that I think is highly probable, but I also don't want that, type of cash secured put exposure that is tying up a lot of my buying power at this time. So markets on the clock, 20 days. Okay. Or I should say a month, 4 weeks, but roughly 20 trading days. Okay. And we'll see what happens for today and tomorrow with engineered options. We have those expirations coming into tomorrow. We have some levels in the 6450, 6500 zone. Recent structure here is around 6600. It'd be nice to see a nice little bump. The JP Morgan collar trade, apparently that big number is 6475. So if we get back above that to close up this quarter, again, a lot of these big levels go away on Tuesday. But if we're back above 64.75, I believe we have a couple of profit trap opportunities sitting in there. Okay. So we will find out. Okay. Let's see here. Aurora says I have a ratio spread expiring tomorrow. 67.35, 67.20, 67.45. Is that a ratio spread? So you did if you're going -2 at 67.35, I don't know. Are you sure that's a ratio spread? That looks like a broken wing butterfly, maybe? Yeah, I think that's a broken wing butterfly, Aurora. And is that a trade from me? I mean, it looks like if it's a broken wing butterfly and you need price, I'm just going to try to read that. So if you bought the 67.45, sold two at the 35, bought at the 67.20, that's a broken wing structure. That would be a $500 profit trap with a 15 wide. I'm not sure what you pulled in credit wise on that, but basically that trade needs to get back above 67.35, which is way up here. To me, that seems pretty unlikely without a pretty solid rally. So there's not much to do to manage that thing. If you're one day away from expiration, you can't really roll it. You're going to roll it for a debit. You're going to dig the hole deeper. It's defined risk. That's pretty much the trade, you know? So, I mean, again, I hope there's a big rally. It'd be nice to see a big rally off this low if we can get one, today, tomorrow, or this week. Obviously, the market makes a little attempt in the weekly charts. We've seen 5 of 6 weeks bearish. Look at this thing. We could even take that a step further. 1, 2, 3, 4, 5, 6, 7, 6 out of 7 weeks bearish. I think month wise, and I mean, we saw February and March. I want to say on the monthly candle, February and March pullback. Weekly streak, like having this many weeks in a row, is like I think 2022 was the last time this happened. So, again, put it in perspective. The market's had a decent correction, but that is what everyone is asking is like, is this a correction? It is down. This is the S&P on the monthly down over 9%. 9% is at the bottom, or is 9% going to become 10 or 12 or 15? We could have a 9% flush, rally back up, another leg lower, which is going to be the painful wave. If anybody's not de-risking, deleveraging in here, that could be the painful wave. And then again, and then again, we could have all this play out, right? Previous support back in here. Let me make this a little bit thicker. Previous support, or I should say previous resistance to become maybe future support right around that 6150 area. But most importantly is, I mean, I don't think the market, unless we are talking like straight up crisis, the market rarely moves in a straight line. So this little dispersion, correction, combination that's just gotten a little bit uglier, a little bit messier to give this market a reason to break out. I do think off that 9% handle, 10% handle, I think the market does have what it takes to show in the near term some oversold conditions, some divergence, and we could muster up a little bit of a rally here. I think that 6,700 is possible. I think 6,800 is possible. I don't think we reclaim 7,000 with any conviction. I don't think we come anywhere close to that. But I would just look. I'd be prepared right now that the Bears are on their heels. The Bulls are in control. I'm sorry, backwards. The Bulls are on their heels, Bears are in control, and anything that comes up like so, I think is a chance to get risk off the table, which ultimately would be pretty important because if we go a leg lower, that is never a fun look for your profit. That's never a fun look for your portfolio. Does that mean we want to get heavy and short the market? Well, I mean, we can obviously position for it, right? We can take some broken wing butterflies. We can call some tops of bear call spreads around 7,000 to find risk. Because if those are right, I wouldn't mind having a stack of trades that give us some love there. I was so close last night to shorting the VIX, but I think that if we're going to see another leg lower, I think we go up into the 30, 35 to 40 VIX. I'll short it here. If I have an opportunity to short VIX like 35 or higher, I'll short the VIX. That to me is probably my safest and most near term trade on crash insurance, which I mean, typically I use crash insurance to hedge my portfolio. I think this is a way to also generate a bit of a trade income to kind of get back in the market when it's heading lower. Taking some profits off the VIX if you can. Another instrument that I like to use. We haven't had a crash yet on the VIX, so I haven't played this one this year yet. But the SVXY, which is also pulling back a decent amount. If we have a VIX event where we go into the 40s or 50s or 60s, anything that happens on SVXY, this was Liberation Day last year. This thing flushed hard all the way down here to low 30s. I bought it. I think this is a great instrument that is cheap enough to get paid, for 100 shares. Like you allocate $3,000 and this thing goes up, 15 to 16 bucks. It's like synthetically, I wouldn't mind being long if I want to use just options or just obviously buy it outright and see if the market can go from like a 40, 50 VIX and reset. I mean, a 40, 50 VIX that resets to 20, this should go up. Okay. If you're short the VIX, there's a lot of potential there as well. So stuff we can consider talking through and working with. Make sense? All right. Questions here. North Carolina was good. It was fun. I mean, families in Winston-Salem, we had fun. Took Carter to a couple parks. Weather was nice. Awesome to see family. But glad I was home Friday. I think that Carter working with me in the morning, he tolerated it for Thursday, and then Friday he was like, "All right, dude, I'll give you 30 to 45 minutes before I'm about to lose my mind." So, but he traveled like a champ. I give him, all the credit in the world. We, had an hour and a half drive to the airport. We flew 3.5 hours home, and he didn't make a fuss the entire time. So, super thankful. It was awesome to have him meet my aunt and uncle, who've been asking to see him like since he was born, and they have 4 grandkids they see all the time, and so they're kind of lumping him in like, hey, we want to spend some time with him. We want to do some video calls and try to see him more. But on another note, we are probably 1 week away, tops 2 weeks away from adding another kid to the mix. So we are really close. We're at 38 plus weeks. We have a doc appointment on Thursday. So most likely, I mean, I could see the doctor saying this weekend it's go time, or anytime next week. So just put that on the radar. There might be some uh, childbirth disruptions for the next 1 or 2 weeks. All right, let me get some questions here. Phil says 6 straight days of selling wiped out 22% of Micron's value. Sell the news event. Yeah, I mean everything's been deleveraged. I mean, I'm sure if you look left on some charts, there's some things that look like a pretty good value right now. Trades be managed when asset changes direction inside pinch point go zone. I mean, if we're in the trade, Harold, I'm just going to stick with it, dude. If we're in trades already in pinch point, then I'm sticking with it. Right? Like if it shows in the go zone and we're taking trades, we get filled or we don't get filled. Like all the trades I posted last week for pinch point, there's 9 pending orders. I'm gonna stick in there and see if they work out. That was a combination of good technicals plus the volatility pinches that we saw on the scanner. And, I did some broken wings. I'm building some structure. I mean, it was a combination of bull call spreads, at supports at 200-day moving averages, as well as broke wing butterflies, looking to see if we could put in some short term lows off of like key support levels. Okay. So, Harold, if followed, did you see my trades from last week? So that's why it's like there's layers to pinch point. If I just took it at face value, I want to see a chart. I mean, I was always amazed with Tom Sosnoff telling you like I've never seen a chart. I never look at charts because he just trades his option chain, which is great, but that's not me. I learned how to trade some technicals. I like to see what I'm trading. I like to find some key levels like highs and lows that I'll trade around. And so I want to pair that. So last week, those pending orders that I put in, the video that I sent out for pinch point members, it was all based on what I thought was pretty good structure in addition to having a really good go zone setup. Okay. Am I going to trade at the hospital? I don't know. Probably not. We'll see if we can have a weekend. I'll still do live sessions, but I'm just going to be like limited live other than, maybe 60 to 90 minutes tops. Get my morning stuff in since it's so early. I mean, this is 7 a.m. start for me. So like 6:30, 7 a.m. time of the computer. And then, I want like a week or two just to soak it all in. Right. How about the misses? All right. Okay, good. Yep. So a lot of those trades, Harold, I mean, the breakout breakdown, I'm choosing to trade a lot of those both directions, or I am choosing a level based on, pretty major support. Okay. All right, good stuff. 925. Let's get some pre-market dashboard. What in the hell, dude? This can't be right. Hang on a second. Okay. This can't be right for the day. These are all defined risk trades. There's no way it's worth that much risk. All right, let's see if this adjusts after. Does anybody have some wonky numbers on their SPX, by the way? So, I mean, this is a June trade for 3 contracts, 13. What the fudge? This can't be right. That is a I don't know. That's got to be wrong. There's no way that trade would be filled for 13 cents. That'd be a pending order for something. So this should be like a 50 to 75 cent waterfall income trade. Let me double check. Let's go 5950. Yeah, for a dollar pending, dollar 50 cents. This is all incorrect. This has to be like a 50 cent fill. This should be fixed. Because if this was true, then I wouldn't have this buying power, which is fine. So this should be updated to like 71, 72K. All right, let me log out, log back in, see if this is just a weird fix, glitch. Well, I want to get a pre-market real quick. What's my pre-market? Give me my daily profit play pre-market S&P. Give me the plus minus on S&P for Tasty. Give me the plus or minus on Thinkorswim. I was on the computer last night watching futures. I saw like over 100. Thinkorswim shows 51.7. Yeah, 100.81. Yeah, that's what I saw too. So 100.81. I put that on the expected move box. We got Thinkorswim at 51.70. We also had an inefficient day with my expected move box last week. It was 70 some points and it exceeded it. I mean, we had a close near the low of the day. Still ended up winning. We went 5 for 5 winning days last week. Here's my 100.81. Again, I think that's a little bit overblown, but probably the safe thing to stay the fudge out of the way. If we can collect some premium, I would think that maybe that low is safe. We're going to have a decent gap to the upside. Futures up about 0.85%. CFD's up 1.10%. So we could see some catch up there. Gamma right now, all this changes very quickly in the morning. We have the positive negative gamma pivot around 64.50. Ever opening about 0.8%, 0.85% higher. That is up here. So it looks like we're going to open around 64.20 ish, 64.20 and some change. Could we shoot back up here into the 64.75 zone? That is that JP Morgan collar. Let me pull up some real time gamma as well. I'm going to log back into Tasty. Okay, again, pretty wide gamma, over 100 points expected. VIX is still elevated. Put this in perspective. We had an overnight VIX around 3164. 3164 by 16. We could have like a 2% move today to the upside. If the market's going to use this as a chance to push higher, this VIX going up to like 31 and change, that could be our, high from, again, not just the close on Friday and up 2%, but the gap open plus another 2%. Like that is a big potential move. We'll figure it out. So let me go real time gamma, log back into my broker platform. Hopefully, I'm not down $11,000 on a defined risk trade because that shouldn't be possible. There. Yep. So it's again, that was weird. All right, we have it's opening bell. Oh, it's quick. So let's go SPX. Expected move is already dipped to I've got a plus minus 43. So market is open. And let's have a look. So we have with the gap adjusted. So are you going to put this at 100.81, which is again way out there. 100.81. There. Now we got a 65.18 gap adjusted. Okay. If we go to the previous day's close, that's 63.70. I'd like to sell some premium, see if that low stays in place for today. So I'm going to look at some bull put spreads around last week's lows, 63.70. That's a 20 delta. See if we can just muster up a rally today. I'd hate to see the market drop. So, I mean, to be safe, we probably go lower delta again. Let's see what it looks like. So call side, as long as I'm selling above 6,500. Put side, I'll look at a delta. Low last week around 55. 63.55 puts me at around a 15 delta. Let me see what a 10 delta gets me. 35.25. Okay, I can go put side only for $1 and change. Let me do that. I'm going to go like probably 15 wide today. So I'm going to go 10 deltas. 63.35. Let's see if we can go either 10 or 15 wide. I'm going to try to go 10 delta, 15 wide. So this is my put side, 63.35. And then I've got my expected move high around 65.18. So see if we get something for that 65.20, which is a 7 delta. Okay, so that is 15 wide for $1.20, a 7 delta. That's below the lows. Okay, let's see if we can get $1.20. So 65.20 is my call side. I'm going to go 15 wide. And 63.35 is my put side. I'm going to go 15 wide. I'm going to try to get $1.20 on this and let it fill. And if I put another trade in, try to go $1.20, $1.20 maybe. 30 by 15 just got filled for $1.20. And then 25 by 40. See if I can grab another. Let's try to get another $1.20 out of this one as well. Okay, these are coming in Telegram. All right. Today's the 30th. $65.25 call, went 15 wide, 65.40. Oops, that was 20 and 35. Okay, so 20, 65.35, 63.35, 63.20. I got 2 daily profit plays in right now. They both got filled. 65.25, 65.40, 63.30. All right, trades are in. 5 delta. This is shifted to a 9 delta. A little bit of pricing skew. Market's rolling over pretty quickly on this gap up. Okay. Oh, fudge. Well, it's quite possible that I put my call side or my put side rather, way too close. Well, I've got $2.40 to work with, so getting a cheap, and this is another way to play defense here. I'll probably have to put in a cheap butterfly spread, not a broken wing, but a butterfly spread, so I can get paid if price is going to fall. So price falls here, then I need to get paid, pretty well to cover a lot of that risk. Again, we've had 2 inefficient days in a row. That would have been the close on Thursday and the close on Friday, but you kind of throw it all out the window. I mean, high VIX should be a good thing for option selling, but I don't know. I mean, we have a wide pre-market move. Plus minus already on the morning has already shifted aggressively to 45, so we shouldn't see this price tested as far as like the current mechanics. But look, my put side went from a 10 delta to a 14. So let me see if I use this expected move down here. 62. I mean, this should be cheap enough to play this thing. If I did like a 62.75, 62.75, I might go. Let's go 25 wide here. See what this defense looks like. So this is 30 wide. What's this going to cost me? Okay, so I've got a 30 wide defense trade, which I don't really want to put on because I don't want to eat away, a dollar of my potential profit. I've got $2.40. If I take this defense trade, it's going to cost me $1. But if price is going to fall, I need to have some better defense than just a broken wing. Broken wing wouldn't be terrible, but I have to stack a couple up to see if I can get some profit traps. So I don't really want to sacrifice the dollar if I don't have to. It's obviously a little bit better to take the 5 to 25 cent debits on the broken wings. That's actually I might do that. So I might go. Let's see if we can kick in some defense around 45 by 25. That's a 20 wide. Something like this for defense. That's pretty cheap. That's 20 wide. It's cheaper if you did this for a 15 wide. So let me do this defense for like 5 cents credit. But I'm still taking on another $1,000 risk if I take this trade. I'm just looking at the expected move. I mean, if we're anywhere close to like filling this gap or falling for the morning again, I mean, this would suck, by the way. If the market's going to give us 2 inefficient days and we're going to fall down all day to fresh lows, that's going to be a painful day. It honestly might be a better idea just to put on like the big fat butterfly spread and have this be just a monster profit opportunity. So 63.25, 25 wide, 25 wide. So it cost me 75 to 80 cents profit. So if I tick 240, I mean, I'd still make like $150 on the day. I feel better about this type of defense. Let me look at some real-time gamma before I pull the trigger on that. Just look at it delta neutral, Roger. I mean, as always, I find my deltas. I'm always looking at the delta. The expected move box helps because this kind of gives me an idea. If you want to go kind of the safest is doing bear call spreads up above this expected high and doing bull put spreads down below this expected low. So that being said, I could look at that right now and just throw another iron condor on. I mean, we do have some decent real-time gamma here. 6,400 seems to be a pretty big level. See if it just kind of sticks there. But I mean, we've had some fluctuation already. So opened up around 27, 25 to 27. Well, I guess we opened here and we're back to neutral. But we spiked up really quickly to like 27. Is that what I'm getting on TradingView as well? This is a 1-minute chart. So we open up around 17, spike up to 27. We're falling. Okay. So let me look at the expected moves since price has fallen a little bit. 65.20. So my call side is where I want it. Right now, I could probably go a little bit higher delta on the call side just because it's now shifted to like a 10 delta. Chance of getting above like 6,500 today. I think I'll just do the 6,500. So 65, I'll go 10 wide here. 6,500. So let me go 10 wide and see what this looks like. And I'm going to put an expected move down here towards 62, 62.70. 62.70. All right. I mean, so going towards my expected move box, I mean, right now a 10 wide is only offering like 50 cents credit. I'm not going to take that trade. If this fills, if I can get filled on this thing for, you know, $1 or $1.20, I don't mind taking this trade. I'm going to try to go for $1.50 and see if we get a little nastier. So 70, put $1.50 on this trade. Let me look at some defense. I think I'm going to go 25 wide. Shoot, that thing was 75 cents a second ago. Now it's over $1. Tighten it up a little bit. That's 50 cents for a 20 wide. $0.70 for 20 wide. All right. Expected move box low is 70. Just hang in there for a second. So I'm just trying not to give away my upfront credit. This is a good way to play defense. It's a bit pricier, but I'm doing this because I don't have my puts at the expected move lows. So I want to have some kind of immediate defense around those levels. This might be a throwaway trade, but I think it's better to have it than not. And I can obviously go further out of the money and make it even cheaper. So let me see what I can work with here. So that is 25 wide for $1 and change. I'd like to get this one filled. That is 25 by 25. So that is $1. Let's see, that's $1. So it'd still make $1.40. Got some defense around the, gosh, I just went way too high on those puts. I mean, it's based on the opening price, and I should have used the expected move box low. All right. I hate to give away, you know, $1 on my $2.40, but I'll still take the win if I'm positive. And obviously, if this turns into a profit trap in any way, shape, or form, that's not a bad trade. So let me see if I can sneak in defense for $1. All right, this is probably going to get filled for $1. All right, pending order for $1. That still gives me $1.40 to work with, and I'll probably throw some bear call spreads in to kind of buffer my my gains for the day. Come on, dollar. All right. Pending order. I'm going to put in the other broken or the other iron condor. I'm using the expected move box in that one. Just got filled for $1 on defense. So pending order. So I'm adding a defense trade. Butterfly spread. Not broken wing. So I bought the 63.25. All right, just typing this Telegram for everybody. Expect to move box. Okay, so pending order, go into the expected move box 10 wide. I might go 15 wide there and see if I can go 65 by 15. Can I pull in some more credit here? Nah. All right, let me just button this up a little bit. So I'm going to get this out of the way. That is 10 wide. I'll keep an eye on that 10 wide. I'm going to try to sprinkle in some broken wing butterflies now. So let's go 15 wide here. That's 15 wide on a credit. See if I get like 20 cents credit on that broken wing. That puts my break even. See, 10 cents credit, break even, 15 wide profit trap. Puts my break even around 62.75. Give me small debit here. Try to get a small credit on this if we can. All right, that's pending. I want to see if I can get this broken wing filled for 5 cents credit. Let me get some comments here. No, I'm looking at the broken wing now. I put the put spread of my daily profit play was way too high. I should have been using numbers down here, so that's why. So I'm just going to go for kind of the immediate defense. If this level gets tested at all, I need to have some additional defense right in here. So I'm doing about a 20. Was it 25 wide? Defense is 25 wide. So I'm paying $1 to make up the $2,400. But if we come back and fill this gap and we bounce, like, we need to see this thing bounce. If it fills the gap and falls to fresh lows, like, this is not good. This is going to be a risk management type day. So can I get 5 cents credit on a broken wing? I would like to think that I can. I don't mind taking it for a 5 cent debit, just because I'd still have a $1,500 profit trap if things get a little gnarly. But let's see. Nope. I'm just gonna let those ride, Stephanie. I mean, if we have the market muster up any type of rally today or tomorrow, I mean, we've had defense and we've had a lot of engineered option trades we've taken right into the final expiration. I mean, end of month, end of quarter, it's been surprising to see the market makers suck so bad as far as like the big JP Morgan collar trade levels, which comes out every quarter. It's usually like a 10 to 15 delta. They have let that slip through. I mean, I know the number 64.75. So if we don't see the market make an attempt to try to get back to 64.75, then it just means that all the hedge flows are just pushed aggressively to the downside. Okay, I'm surprised this isn't showing any fill for credit since we've fallen a little bit through the opening price. I'm going to put this in for a 5 cent debit just to have it. Okay, I'm taking a small defense there for a debit. And I'll do the same thing here. This is another 15 wide. So that's 15 by 20. Take this one for another 5 cents. See if I can get 5 cents credit. No, I'll just take another small 5 cent debit. Okay, so I've got two 15 wide broken wing butterflies at the bottoms, 5 cent debits each. So here's the kind of stack of trades. Call wise, I mean, I feel like I should just sell a bunch of bear call spreads and try to wash away some of this risk, but let me look at something really quickly here. If I do look at a trade for tomorrow. If I were to sell 64.15, no, that's not going to do it. Looking at a back ratio spread for tomorrow. Let's just hang in there. I mean, if we hold these lows, I can put in some more aggressive bull put spreads if price returns to center. Again, I could be overdoing it by using this, 100.81, by the way. I mean, look at current price. Current price for today, we have a plus minus 44 points. So I mean, I just went delta neutral. I mean, I chose a 10 delta, but price has fallen. So obviously the delta shift aggressively in a 0 DT in space. I don't want to get super aggressive on just selling bear call spreads, although the market's having a harder time going up. But I'm just going to hang out for a sec. All right. So I got a couple small defense trades in. So adding 2 small 5-cent debits on 15 wide broken wing butterflies. That was a 63.05. 62.90. And the 62.65. $62.95. So these are not overlapping. These are all sprinkled into the strikes. So no overlapping strikes, which is good. All right. So let's see if we can stay out of the way. This is where my puts start. So did I do 15 wide or 10 wide at first? My $1.20 is a 15 wide. So 35 by 15. No. 30 by 15. So 30 and 15. So that is my put spread on my daily profit play. 35 is my defense. $1.20. So 35 and 20, and then 30 and 15. Okay, so these are my daily profit play right here. Daily profit play sprinkled in right here. Playing some defense with a standard butterfly that's 25 wide, and then I've got $15 profit traps on the broken wings. Hopefully these are, I mean, we're talking 5 deltas here. It should not test these levels. If it does, it'd be testing, down here towards the low end of the expected move, which we obviously don't want to see price at this kind of exaggerated plus or minus move. That's where like the implied volatility is typically greater than the realized. So I think the important thing for right now is we see where price reacts to this gap fill. If price fills the gap and bounces, if we fill the gap and bounce, then we're probably going to have a range day that's pretty easy to trade. If prices just gap up and flush this thing lower, not good. Powell's not going to save the market. I mean, I don't know. Price stability, we're at a 9% correction. The bottom here is 9%. Could we sell off another 1% today? I mean, even if we sold off 1%, hit that exact 10% correction, that puts us around 6,300. So we'll see if the market has some fight in it today. This is real-time gamma. Really sticky spot around 6,400. We have some gamma support around the 6,370, 6,350. Even my strikes are at 35. I'm hoping they don't get tested, obviously. So 6,335. And I've got profit traps locked into around 6,300. So all my profit traps. So 6,300 is a big profit trap. 6,290 and 80, those are all 15 wide. So I mean, I've got profit traps potentially down 6,300 down to about 6,270. Okay, so I'll put this starting at 6,300. That's when things get a little juicy as far as like profit trap material. And then my risk is going to come in around 6,335 here. Okay. So risk kicks in the yellow box. Blue is profit trap. Price just been fading. Let's see what we get. Yeah, I did. It's in Telegram. I mean, if anything, they might be offering a credit right now. This trade showing a 5-cent credit. I'd still, if you want to go 15 wide, you probably have to take a very small credit, or just like I said, I'm paying a small debit. So they're both filled for 5 cents debits. That's probably still fillable. 5 cents debit should still fill because they're fluctuating back and forth between a 5-cent credit, 0 debit. I'd say 5-cent debit could be easy fill. Okay. All right, let's set a chart while I'm here at 63.35. I'm not going to sit here and babysit this thing, but obviously I want to watch price. We got other stuff to do. So 63.35 taking on some risk. 6,300 would be profit trap material near the end of the day. Anything between 6,300, 6,270 could be, pretty lucrative defense. Again, it would be ugly. I mean, I'm basically risking about $2,700 on my daily profit play, and I have potentially, $5,500 in profit traps. So I don't want it to have to, come to that result wise, because it's like you're managing risk, but I will do the best I can. It would be nice to see the market at least acknowledge that this low means something or this gap fill means something, and see if price can bounce. Okay, especially having, the 101 expected move box, which was high. I mean, it's literally double in Tasty what it is in Thinkorswim, but the price action already has opened and we've already fallen 46 points, which is essentially what we're showing right now in the current expected move, right? So pretty crazy stuff. All right, check out a couple of things while we're at it. Let's take a look at NASDAQ. Okay, same thing. That 20 days of trading, 20 days of trading, 30 days on the calendar. The 200-day moving average. We've had a correction on NASDAQ now. I do have some measurements here. If this is a double top and we've broken the lows, NASDAQ could be projected out to. Let me get a measurement. I think one of these blue lines is going to be that symmetry that I like to play. So here's a high to low. That's about a almost 9% correction. Let me box that in really quickly. So this box right here broke. I think it's going to match up with one of my blue lines. Yep. So this level, I'm going to label this one 520. So about 527 on the Qs. See if I can label this. So double top symmetry. That way I can get rid of the yellow box. Everybody, does it make sense? So if we take this measure move here and we're breaking the low, you project that move. Like that could be the finishing point where if the market's going to have more pain, that spot's where I'd say, okay, in the near term, I would like to buy around the 525 to 530 handle on the Qs. See if there's a measured bounce there. Okay, that's NASDAQ. Dow, I have a 5, I think it's a 455 by 440. This is out to April. I have a ratio spread. 440 puts us around 12.8% correction. Previous resistance around 450 as well. Put a horizontal line here. So looking to see a price will at least bounce off of this. Past resistance becoming support. It's testing it. We're below the 200-day moving average. Russell, we're at the 200-day moving average. VIX back to 30 plus. Got the VIX right here at 30. Let me see if I set a chart alarm. I would not love to see the VIX get above 3170 today. Okay, let's keep going down the list. Move index for bonds. Bond volatility is here. We've had 10-year yields going crazy. And that's a big rate of change in the 10-year. It's still range bound, but if you look at, that's a 14% swing in 10-year yields. If you look at LQD, we need to see some big green action here on LQD and HYG, which are kind of your measurements of credit spreads. So this has been beat up pretty badly. This is the credit crunch type stuff. This is where the market's, exhibiting some stress. Go back to U.S. oil. We are up over $100. Again, not a good sign for the market. So we gapped higher, right? From the close on Friday, we've gapped higher on oil. Let's see here. Soybeans supported. Oil rises. Persisted tensions. Record month stocks in limbo. This is, I said this, like, I think the escalation is oil above $100. The de-escalation is oil back below 85 or 80. So if we're back above 100, this is going to put more pain, more stress in the stock market. I just don't know if Trump believes he can just, talk, tweet, pivot his way out of this. But I think that there's more players involved than just a simple, hey, the U.S. is going to just remove itself and say, here's our victory that we can declare. I think it's a very tricky way to, job on this. I think the market is not buying it like they once were. So again, I think it could be very simple. If oil prices are above $100, there's going to continue to be stress in the markets. I'm going to try to make it that simple. I obviously want to see oil fall where we have this range from maybe 100 plus to 90. It's like, okay, there's some indecision there, but to spike up here towards 120, fall all the way down to 79, spike all the way back up to 100, spike all the way down to 85. It's like I said this before in gold. If we have a Gartley pattern, this is how it plays out. You have this huge run. There's your swing. Low, high, higher, low, potentially higher, high. So if this works its way up into like the one, let's say, I measured it here like 116, 117. If we're up in this area and we don't form a top, I'd be surprised. Especially if we're going to fix something in 2026, we'd fix it technically with something like that. But, all bets are off when the VIX is at 30. You want to measure all this stuff and see it be perfect. Maybe it is. But I'm just saying this is not a time to play hero and bet big on anything. I feel like the market with a high VIX, it's like you are looking at a lot of volatility and, levels are stretched. Markets are uncertain. Cash is a great thing right now. Cash and opportunities, defined risk trading is great. Gold caught a decent bit off these lows. GLD's back to 416. I got a trade that expires tomorrow for March Madness. I put this in with JD and I was playing against Jason. So I did a broken wing butterfly here for 30 cents credit. Got filled last week. This expires tomorrow. So hopefully we stay above $400. I've got a profit trap too. So I mean, oil or gold will have to fall back to 399. Which if it does, I got a profit trap, which makes it like a 2-to-1. But I'm gonna keep a close eye on this one. Silver, I mean, off the lows a little bit. I think you just need to be patient on both. Bitcoin still not below 60s. This is a 4-hour chart, so your daily chart still not below the 60 handle. Probably a lot of chop in here. You know, maybe some rounding. If we, consolidate in here longer, that's understandable. If there's at least some bid, I just don't want to see Bitcoin take out the 60K low without a fake out. If we test 60K, let's say we test 60K. If we bounce right back up, that's an encouraging sign that this is at least a respected low for right now. One thing I want to take a look at really quickly is market breadth. Okay, again, we are seeing the continued deterioration of market breadth. This is another near-term timing indicator where I could see a justification of going long in the market. Not something I'd want to say I'm fully committed to, but I'd say give it 30 to 45 days, maybe 30 to 60 days, and whatever profits you can muster up in here, whatever de-risking, de-leveraging you can do. If we see market breadth, get down to like 13 or 12 or 11, I would just be shocked to see the market not respond like it has in years past. This has been a really, really good market timing indicator. You give yourself, like I said, 30 to 60 days, this market usually rips as a whole. We've had enough individual stocks beat up. We have enough sectors beat up. Our year-to-date sector, I think energy is like the only thing that's winning right now. So sector performance-wise, let's go year-to-date. Okay. I mean, do you remember in the beginning of the year when all these were in double digits? I mean, energy's up 40%. That's insane. It was up 20. This is up teens, but they've all been given back. So you just have this huge run in oil, a huge run in energy. Part of me wants to take some profit. I mean, I'm long XLE, and this thing just doesn't seem to be stopping. I just feel like it's not unreasonable to think there's going to be a pullback here. So, I mean, I guess we could stretch up technically to 65 or 70, but I feel I'd be asking for a little bit too much profit with just a single trade, not long-term stuff, but just a single trade. All of my exposure here on the X's. So XLE, I'm up about $19,000 on XLE. I wouldn't mind taking some profit. I still have some, naked puts, which right now are up about 85%. Naked puts here up about 96%. I mean, I'm not going to get much more out of this. So I think it's probably in my best interest to be closing these down and taking some profit. So I think on the share side, this is a decent chunk. I've got everyone up about $1,000 on XLE shares. I think I at least need to put in a trailing stop loss. I'm going to take profit. I think it's been a good chunk. It's 18K, gets me some buying power back. Let me close this down. Close. I'm just going to take out some shares of XLE. So I'm closing down XLE. Okay, so I'm taking some profit here. Be nice to add some buying power back to the mix. I'll close out some of these naked puts and get some buying power back as well. A lot of these are almost fully realized profit, 85 to 90% of max profit. And hopefully the options are liquid enough with this run that I'm so far out of the money that it's easy to close them out for profit. But this hopefully will help me raise a little bit of cash. Okay, so all my shares of XLE I've closed, and now I have a bunch of naked puts. So this one is up, 85%, $700. I'm going to take it, get some buying power back. So max profit 768. Close this thing down for maybe $1.20. All right, so 768 minus $1.20. Not bad. 768 minus $1.20. I made $650 right there, 648. Not a bad winner. This one, I've got a bunch of naked puts here, 40, 37.50 ratio spreads. This one is 271 times 2, so $542. I'm up about 94%. Oh, yeah, that's great. So down to 17 cents. Let's try 15. Nice. Good fill. See if I can close a little bit cheaper. 10 cents. Nope. 12 cents. Nope. Try 15 and just get out of here. 14. Not bad. Naked puts closing for so 230. So this one, different expiration. Okay, so December. I'm gonna let these marinate for December. The June ones I'm gonna close up though. I'm gonna close up these June June naked puts. So anything else in June for XLE. So December I'll keep. June I will close. There we go. So these are naked puts. I'll keep these running in P's. All right. So my June ones, 270. Yeah, that's up. I'm only sacrificing $20 of profit here instead of waiting 80 more days. That's a pretty good winner. So close this one for as little debit as possible. Ooh. Try an 08 debit. I'll try the mid at 10 cents. Okay, so a 270 credit closed out for 259 max profit on 2 contracts. That's not bad. So 259. So just close out $518 profit there. I'm going to keep these naked puts for December. Right now, there's about a 96% chance that they stay out of the money. I mean, if we're coming back to $40 on XLE, we'd have to basically take this entire thing out. Not saying it can't happen, but I'm also willing to own energy at $40 and it just gives it all back. So again, it probably won't happen. If anything, we have, good structure where this had a breakout. But who knows? I'm going to let a little bit more time work in my favor on December's. So keep the December's, close out the June's. I can, yeah, I think I can. Let me see if I have a deck for that, Deanna. I'm seeing your comment there. No, we can look at engineered options. Yep. There's just a lot going on today, right? So engineered options, give it a fighting chance. If I want to participate, we've already had the market up, pulled back. I think we can look at a participation trade, see if the market can finish the week higher. But let me look at the workspace here. Let me get some trades running. So engineered options. We got to trade small and keep the defense alive. That's what's been saving our skins this entire year so far. So open up here on, let me go XSP, so we can manage some risk. All right. So I'm going to look at we opened up here, break even for the week. See if we can get filled at like 640 for participation. I don't mind taking these trades for engineered options. 640. And then around 632 and around 625 or so. Let me find those exact numbers. So see if we do like a 640. This would be April 6th expiration. That'd be next Monday. Yes. So we started here. I don't want to chase, but there's a 640. So I'm going to go participation, 640. Okay, break even is going to be the close from last week. Close from last week is 636. So we'll do a 636. 635. Defense here would be 631. And then we have the 624. I'll go 624. All right. So this is what I'm looking for. All right. Getting this posted for engineered options in Telegram. This is XSP. Just getting this all tied up. Also get some monthly trades issued this week as well. I'm not going to do this immediately. Defense. So we have participation trade. Okay, almost there. Okay. New trades for engineering options. Yep. So trades are in, posted in Telegram. We still have trades to manage for tomorrow. We're going to have to see what the market does. If the market can give us anything to the upside, we have a couple profit traps around the 6,450 to 6,500 zone. It's going to take today and tomorrow to see it. If it doesn't happen, I accept the risk. But like I said in the thread last week on Friday, look, Tuesday's end of month and a quarter. I know we have some stack trades. Any defense trade can help us a ton. It might wash away a lot of the risk, might help us be profitable. But the process doesn't stop with a few losses. If we have a nasty week and we have a nasty end of the month and the market finishes at a low and we lose, the probability of profit remains the exact same. We still have a house hedge. Doesn't matter if we're in a bull or bear market. We still have a 56 to 58% chance that we can be bullish every single week. Whether it's a bear market or a bull market, it doesn't matter. Okay. So I'm still going to trade. And that is the way that we make money. And, you talk about this is what everyone wants to see in your P&L, right? You have this is my trading. Everyone wants to see this for their P&L. The reality is you're going to see this instead. This is trading. It's never a straight line. But the average of all these trades still gives you a positive track record. But it does take losses and bumps and bruises and base hits along the way. So there's lots of base hits. There's some losses. There's more base hits. There's losses. How many wins do we have? More than losses? We should make money. How big are our wins? We should make money. But you can't let one losing stack be a reason you can't trade. Same thing for waterfall income. Same thing for anything we trade. A loss doesn't define a strategy. Okay? Keep trading. Trade small, risk defined. That is how you're going to survive this. Okay, I just posted it in Engineering Options. If you're a member of Engineering Options, there it is. 1019, new trades. I'll get these posted. Okay, so they are in. We will see what the market gives us. I'm going to get these trades in just a second. It's not super time sensitive. I'm going to let them sit all week. Okay, I'm going to continue to close out some of these naked puts. I'm going to close out these June naked puts because that's majority of my profit. Or I'm going to try to close out as much of this as I can. So close this down for a small debit. Okay, good. XSP is cash settled. Jose's asking on YouTube. XSP is a micro, like a 1/10 the size S&P. It's essentially 1/10 the size and price. It's almost like spot price of SPX, but it's 1/10 the size. SPY is the stock ETF. So it's an index ETF. It trades like a stock. It closes at 415 or 430. XSP is cash settled, no assignment risk. Can we salvage any? I mean, Mark, the trades expire tomorrow. There's nothing to salvage if the expiration is tomorrow. We're down, right? So we can look and see if anything's showing a profit trap, but I'm pretty sure the profit trap is in 6400s. So if they're all below our strikes, there's nothing to salvage. Our expirations are not today. They're tomorrow. I said that last week. I didn't take any weekly trades because we already had a bunch of end of month expirations for tomorrow. Right? Expiration is 331. That's tomorrow. So if anything, I can do a video, I can do a live session. Like I'll figure out what's the best way to communicate it, but there's nothing to salvage. They don't expire today. If we, see them work out, I mean, great. We play defense, and that's exactly why I posted this last week. If we take losses, I accept it. Right? If we see a squeeze going into the end of the quarter, then we can have some defense that are sitting there with big fat, $10 profit traps, $15 profit traps. We might get lucky. That's it. I mean, I'm not going to hedge and double down. It's like, I'm just going to keep trading. I'll keep trading. That's what we do. Okay. Moses, the war continues. Inflation, potential rate hikes, oil rising, plus augmented dollar. I mean, yeah, dollar's getting some love. I mean, at some point. I mean, someone's asking about UUP earlier. I don't know if it was you. Yeah. I mean, it's going up. You're long on it already. I mean, I said I like it into like the 29 area, but I'd still be at some point, wanting to sell the dollar. But I don't think the dollar's going to get that much love. It's like, are we? It's quite the coup if we're going to try to get like this dollar strength around the entire world. But hey, man, like maybe this whole plan and the war is above my pay grade. I don't know what the end game is. Doesn't make a lot of sense to me. And I think the timing of it is like we have like a 30 to 60 day window to get this shit fixed. Because if not, I don't know how Trump is going to go into the midterms with anything good other than like people are exhausted from 6 years of inflation. Why are we in this conflict? Why did this all start? Why is the market down 10, 15, 20%? How is this a good look? So, I mean, I think if any president cares about the scorecard being the stock market, it's him. I think his put, the level is already, we see jawboning every single day, right? We're in deals, we're in talks, we're in this. Okay, show us what's price doing. Goes up for a day and fades the entire week. That was last week Monday. Okay, so my point is, I think the stock market is a big scorecard. I think that the market, might have some near term pain for repair. I'm not going to say long term gain, but I think there's repair ahead. It's just at what point? Is the market down 10% and that rallies, 6, 7, 8%? Yeah, and we would expect another wave lower. But yeah, yeah, I know you're long on UUP, and I think it looks good. But I would be trailing. I'd be trailing stop losses and just making sure you're not giving it back if you're getting some profit. Okay, Mike, I see that there for the broken wings. We're trading at 63.83. I've got my yellow zone as my risk on my daily profit play. My profit trap start around 6,300. I'll keep an eye on this stuff. I mean, again, if the market's going to stay here for the morning and for the day for that matter, if it just does this, right? There's not much going on. I mean, we're safe on the puts. The defense was not needed, but I'd obviously rather have it there than not, just in case. Or if we have any type of rally, our trades are all the way above like 6,500. So, I mean, if anything, we just need the markets to just, just hold their horses today, chill out, let the market give us a, quiet, realized volatility day instead of implied volatility. And that's always a good sign for daily profit play. So hopefully we're not taking out fresh lows from Friday to threaten, 63.35 or lower. Okay. Yeah, Mark. I mean, I don't know what you want on your engineered options, dude. I mean, the whole point is we're playing defense, are we not? We have stacked levels at percentages. That is defense. So to scramble and throw something on top of it, it's like, what are you going to do? Double and triple down and just try to get like a bull put spread that gets you out of trouble? It's like, I don't know. I just don't have a good like level to say like, let's just do this to defend the trades for tomorrow. We're not going to pull enough premium to defend tomorrow. I mean, if we throw on like a low risk, high reward butterfly spread, maybe, but what if we're wrong? Just a throwaway trade. So, like I said, I know the JP Morgan collar levels is 64.75. We have profit traps sitting right there. I'm gonna accept that, we've got defense in, we got fresh trades in. I'll just keep trading. All right. I'm gonna keep closing down some puts here. Close. Uh why is your expiration tonight? I didn't take any trades last week that expired 3:30. So that's why you're asking for defense. I know that my trades expire tomorrow. I don't have any engineered option trades that expire today. They're all 331 expirations. Okay. That expired 331. Anyway, look, either a live session or video today for engineered options. I know we have a lot of crap going on. Look, stuff's this is a lot to manage, but it's just a trade, you know. So we'll figure it out. But I'm going to continue to work through my accounts here. I want to get some of these naked puts closed out. I'm up 92 to 93% of my max profit. I want to take these off the table. And then we will resume. Let me go with Slack. Uh, Deanna, let's see here. Okay, Deanna, I'm asking for a live stream if you have it handy. I'm just going to keep powering through this stuff this morning. Okay, let me know. I mean, we should always have one because I've recorded it 100 times, but we just have to find it. But I mean, I'd love to have an updated one. I'm just if I'm not going to start it until probably 10:45 or 11 o'clock if I do it, and I've got waterfall income at 11:30, so I don't really want to overlap and push that back. I know. Oh, that's true. Okay, okay. Well, yeah. If there's a standalone spot, I'd rather do a standalone today and just push everyone to a standalone later. Okay. All right. Uh, I'm just going to put here preference for standalone later today. That way I can sneak in some video time. I can get my other classes in. So let's see if I just do a standalone today. All right. More naked puts. Let me close these down. Just keep going. All right. 14 cents. No problem getting filled. So XLE. Okay, so that's 271 closing out for 14 cents, pulling $256 out of that, $257 out of that. Times two contracts, not bad. Over 500 bucks. I'll take that. I'll take that anytime. This is a ratio spread. Here we go. Get to raise a little cash here. This one's up about 80%. I'm going to close out this trade again. Probably the profit's 98%. I've got about 80% of the max profit in. I wish it were better, but it is what it is. Like these are just, it's two naked puts. I want to get some of the buying power back, especially on cash accounts. So let me close this thing down for a small debit. Easy peasy. Come on. 15 is getting filled. Not bad. Okay. Almost done. So let me get through these. Those naked puts closed out. Good. These naked puts. Okay. Again, good stuff. Naked puts. That frees. I mean, that's a decent close. That fills me up for that's 4 naked puts. I'm getting some buying power back on. I don't mind that at all. So these are closed up. That's good. Close out shares. That's good. This is December. So that's 2 naked puts. All right. Maybe not a bad way to raise a little bit of capital. I mean, up 61% with those December puts. Obviously, a lot of time in that. But I keep 2 naked puts. I mean, if I close these down margin-wise, I'm gonna get back. I mean, for portfolio margin, only about $320, so it's not like it's a huge deal for me to say I need to get this buying power back. Probably the profit's like 97%. So I will just hang in there so far. The rest for so XLE, all I have running now is my December trades. So look at XLE for Project Options Edge because I know we sold some puts. Project Options Edge. Do a quick search for XLE. There we go. So this one, $1.10 credit. If you did the ratio spread, let's see. What else? 1226, 40 by 37. So this one's still going to run for 230 credit. So we got the 40, 3750 naked put. This is naked put combo. All right. So right now, this trade of $2.30 credit, I'm up about 61% of the max profit. We need a little bit more time in the trade. We can probably close this thing down by June. I mean, go to the halfway point. It's been open for 70 days. Let's say we get to June or July, close it down. But all I have is December, so that's fine for XLE. What's next? XLG. This was one fill. This is top 50 ETF. Okay, I didn't get filled on the other ones. XLU. Another. It's up 73% of the max profit. 38 by 37.50. We're trading up to $46. This is XLU for utilities. $40.5 and 38, 40 and 37.50. 71%. I mean, this isn't terrible. June's not that far away. Probability profits 97%. I could probably just hang in there. It's just I'm trying to decide, is it worth it for me to grab an extra, this one gives me an extra $70. This one gives me an extra $20. It's probably not worth it. So I'll do this on my own time. So I'll close out some XLU. XOM combination. So this one ties up some capital. We've got 91% of max profit on the ratio spread for XOM is ExxonMobil. Again, chance of assignment here. I've got 96% chance of profit. Ratio spread, ratio spread, ratio spread. To get some buying power back, I'll close these down. I have some. I don't have any shares of Exxon. I closed out the shares of ExxonMobil. Just did a bunch of ratio spreads. Okay, so XOM. Looking to close those down. XOP ratio spread is up 90%. For me to hold this thing for another 80 days to make 10% more profit is not really worth it. So XOP, I'll close this down. I'll do this offline. But a lot of these are updates in Project Options Edge. Then XSP is all my stuff for engineered options. All right. Let me put in those engineered options orders. Going to the 6th, which is next Monday. Just going to follow what I put in Telegram. So engineered options here. Putting in the 40. So 40 by 39 it's trading for 47 cents right now. 50 cents shouldn't be that difficult to get. Okay, pending order. 36 and 35. $31 and 30. And 24 and 23. Okay. All pending orders for this week's engineered options. 1, 2, 3, 4. So one contracts, two, four, and four. That's how I space out my trades and I space out my sizing. Max risk is about 500 bucks. We've been making money every single week. We got expirations tomorrow. Let's see what happens. I don't want to lose, but I also know that, I can't control this crap. We're playing defense. We get defense in every week and we get defense in every month, and the market doesn't care. Okay. Look at the month of March. Okay. Tell me if March is playing defense right now, by the way. Is this playing defense? Has the month of March given any defense? No. The month of March is literally the bottom of the candle is where we're at. So if the March month plays defense, then it would look something like this. Started here, large body, and then what happens? If the market's going to play defense, this body of the candle gets a little bit smaller and there's defense to be played. But if we're just all body, then unfortunately, that's just the candle. I can't do that, right? There's nothing I can do to control that. But if we have this, we might get lucky on some defense near the bottom. If we do this, there's a lot of defense at the bottom. But to be determined, because this literally has to happen tomorrow. And maybe March is a shitty month and April is better. And we can participate for the month and the weeks and we'll still be fine. But we just got to trade. Okay. Yep. Okay, good. So I'm going to do a 3:00 webinar today versus trying to squeeze it in right now. That's great. That way we can also be live at 11:30 and get a video update out for engineered options to look at where we're at for tomorrow's expirations and then the fresh trades in for today. I'll get the tracker update as well. I also filled in the blanks on daily profit play from the weekend. We were missing like 4 or 5 trading days in there, so I added those in. They were all winners, which is nice. It was just over. I just had to pull the trades from Telegram and throw them in the tracker, so we had another like 4 or 5 winners added to the mix. Did I miss the move on XLU? Would it be worth buying the dip? I mean, XLU is off to the races. Here's the daily. I mean, I like buying the 200-day moving average. I mean, if you're interested in owning utilities, which this is boring. I mean, this is boring. But any dip below this 200-day, I do think utility is going to be a pretty safe space, especially in the defensive side, where it's like these companies do make money. They do make money. People are going to continue to pay their bills. If we're going to pass the buck on to the hyperscalers to pay their own electricity, these utility companies are still going to make money, right? And I mean, I almost imagine that like the Microsofts and the Metas and the Googles and the Amazons of the world will also, in their own way, like become a modified utility company in addition to a tech company, which might ruin their like growth outlook, but give them like cash stability and I don't know, just utility cash, which a lot of these are dividend stocks. So anyway, any dip at the 200-day, even like a naked put or ratio spread, it's not expensive to do it in the sector. But if you get the dip off the 200-day and it goes up, I mean, we've had this thing since the lows in 2023. Every dip has essentially been bought, and that 200-day has been a pretty active spot on the daily. So if you look at the $44 price tag, if you were to pending order at $40 or classic cash secured put a ratio spread, set a put there. Go out 45 to 60 days, see if you can pull some income in. It's not going to be crazy premium, but are you willing to own some shares of this underline? And if so, where would you want to own it? I mean, I don't mind watching this thing go in an uptrend and the market's going to offer a dip around 44. Take it and repair it, or take it and then see if it gets priced to the highs. If I put a put in at $44 and price dips below it and I get assigned shares and it goes back to the highs, take the profit. I would be very confident we could repair something like this even if we took ownership, and it wouldn't be super expensive. Covered calls. I mean, if you own shares, sure, but make it worth your while. If you're going to sell covered calls, like get enough premium to lower your cost basis and don't complain if he gets called away. Covered calls. I mean, you have to remember there's always that like, what's the trade-off with the option trade? If you own the shares, you sell a covered call, what can happen? It doesn't get called away and you keep the income, or it does get called away and you lose the stock. So are you okay with that? And if you are, then put a covered call on. Covered calls are great, and some people do cover calls with the intention of I never want to get the stock called away, so I'll just roll and roll and roll, which is fine. Um, I'm rolling calls on Nvidia, I'm rolling calls on Intel, I'm rolling calls on a few other stocks that I own, but I'm so far in the money that I'm like, I'm just going to roll them for literally like an extra 100, $200 a month. It's not fantastic income, but for anywhere between 100 to 500 shares on some things, it adds up. I'll keep it alive and kind of keep that credit coming in. But otherwise, the trade off is if you have a cover call and it gets called away, yes, you're maxing or capping your upside, but could be worse problems, right? Seriously, what's the cost of your program? If I wanted all, I mean, if you wanted, so Diamond Club, that'd be this, I believe, right? Diamond member, if you're asking for like all of this stuff, then what's that? Yeah. So Diamond members, you have access to everything that I have here for my classes, including my practical options, which is my $500 bonus course. I don't think we have, and I keep asking for like a standalone webinar on Diamond members, but I get it. Like you probably have to spend a little time with me and see me, go from service to service, and we're taking all these trades and it's a variety of strategies. Nothing really overlaps. So Diamond members typically have some exposure to me where they've spent, a month with me, 3 months with me, 6 months with me. They like my services. They like my style. So that's a Diamond Club member. If you want everything, yes, you can give our team a call and just inquire. Right now, like I don't have a link for Diamond Club membership. People ask all the time. I just send them to the team. Support at prosperitybub.com or call our team. That's our customer service line, and they can have a conversation with you on Diamond Club because the price is gone up as I keep launching more courses. But I'd say the value you're getting is it's certainly a discount on everything bundled. So if that's where you're at, then I'd love to have you as Diamond member. And what I'm pushing for in maybe later this year, once we get 2 kids under our belts and we get a feel for how that's going to play out over, get the little one, the littlest one that's on its way. Um, get her whatever, 8 months old, 10 months old. It's like I'd like to push for more live events. I think those are a lot of fun. I think the energy, the learning, um, to me is like invaluable. So I don't know. I don't know if it's gonna have to be like live events in Jacksonville, Florida, where Prosperity Pub is based in Ponte Vedra Beach, or if it's something like I could do something out here in Utah. I could go to Salt Lake City. There's all sorts of spots. I'm sure I could get a conference room somewhere somehow, not get ripped off by hotels, but having some workspace that would give us maybe a room for 20, 30, 40, 50 people. I don't know. I like live events a lot. So if it works out, I think that would be fun to incentivize people to become Diamond members because I want that to be kind of the Diamond Club slash live event series. I'd like to kind of build into that with enough members, right? And it's a lot to ask. I mean, it's all live stuff, but it's like if I was able to find a consistent hosting site and it's somewhere close for me, um, rather than me getting on the road and traveling all over, which I'm happy to do, but I just don't think that's going to be realistic for young family right now, 202. But anyway, all stuff I'm kicking around for 2026. Moses, if I have a conference, I'm going good. Yeah, I mean, I think a lot of people would, especially if it's I don't know, if you're a Diamond Club member, it's free access to the conference. Just get yourself here. So I mean, yes, there's travel, yes, there's hotel stuff like that, but we can make it happen. So I don't know. I'll talk to the team and figure out if I can have something later this year. But I'd like to do something like that. Obviously, it's easy to be remote and do like Diamond Club sessions and kind of Diamond Club services and just like we can get together live, but do it on like Zoom like we do here. But anyway, I don't know, it's always fun doing it in person if possible. All right, what else? Covered calls, dividend plays. Yeah, I get it. Yeah, you want to hang on to those. Okay, so offline for me, I'm going to continue to take some profits on my energy stuff: XLE, XLU, XOM, XOP. That gives me a little bit of buying power back. I'm taking some of those winners. That's nice. Little injection of cash, buying power. It's fine. Then I'm looking to hopefully see some defense and engineered options if the market's going to fight back at all today or tomorrow. And it might not. I mean, we might finish March at a low, and April is the time for the market to fight back because we've been down. I mean, the month of April, the month of April, I'm sorry, the month of March, just the candle itself. I mean, we're down 9% peak to trough for the year. That's how ugly it's been, which is not nothing. I mean, we're a little bit off these lows, but not a ton. The candle itself for the body of March, it's already a 6.5% month to the downside. Like that's pretty ugly, right? That's an ugly March. Last March was ugly. April was worse, but this is the defense I'm talking about. This is the defense, right? Look at how long that wick is. This is a 15% candle that only closed 1% lower. So this is defense. Now, if March tomorrow, actually put some fight into it, and this became a larger wick to the upside, or I'm sorry, a larger wick to the downside, so it's like less body, more wick, then it shows that the bulls are fighting back a little bit. Just to get out of some of these trapped long positions, I'm certainly looking to deleverage. But March last year, same thing. We had a red February, we had a red March, and March was down about 6%. Well, we're doing it all over again, but worse. So does April, are we having like a Liberation Day 2.0 with April? I don't know. I mean, the world does. Are we going to throw tariffs at the world? We already did. Now what are we doing? We're fighting the Middle East. Does it get worse? Maybe, like we don't know. Risk management. Keep trading. Like, look, it is impossible to trade flawlessly. It's impossible to trade without losses. I know that if I take losses, I know how to make it back. And so do all you. We can make money. Keep trading. Okay? Don't double down. Don't get revengeful. Just keep trading. The P&L path is not straight. It's not linear. It is riddled with dots of making wins and having losses. Certainly more wins than losses, but it is not perfect. Okay? But the net result is we can make money. Sticking to our plan, sticking with the process. It does work. So you can't let a loss discourage you. If I take losses tomorrow on engineering options, I'm going to be annoyed. I'm going to be pissed. It's annoying. I don't like to lose. Market's down the entire month, but it finishes at the low. There's no defense. What have we seen and survived with this entire year? Okay. Even these weeks, by the way, 6 of 7 weeks in a row to the downside, we still made money. So we'll just stick to the plan. We'll be fine. But you got to keep trading with me. All right. Let's see here. Pete, Microsoft. Yeah, I get a lot of people asking about Microsoft. I don't know, man. I think the software disruption is very, very real. If anything, Microsoft on the near term would be, okay, Microsoft here, below the 200-day moving average. Here's a concern, right? This low, let's say that Microsoft does have a bit of a rally. Does Microsoft rally all by itself if the market doesn't go anywhere? Probably not. If the broader market is still sideways to down, Microsoft is probably not going up. So if anything right now in Microsoft, I'd say the best way for me to trade this thing would be out of the money, stick to the mechanics, go out on your deltas, trade like a 20 delta, 15 delta, ratio spread or put, and get long. Or do a poor man's covered call where you buy an in the money call and sell against it and just try to trim the debit so you can make some bucks on it. That way, if there is a bounce, then this thing goes back to 420, 440. But look at this chart. This could be a nasty topping pattern. And the one thing I remember back in 2022 is this was a huge pullback. So yes, it's down from the recent highs about 35%. But back in 2022, it was down about 40%. And if it follows through with this pattern, high, low, lower, high, lower, low, it could be down way worse than that. So, I mean, do I love Microsoft? I mean, I'd love to own it down here. I think it's a great stock to own in the low 200s, even though it's like it probably shouldn't get there. And if you look at it fundamentally, we shouldn't get there. But this is the hard part is like, what if the Mag 7 is on borrowed time, right? What if the Mag 7 is done? And for from this point forward, like the disruption is so real that the Mag 7 is not going to be the top 10 stocks anymore. Like, I don't want to sit here and be a bag holder of Microsoft, which had an incredible decade of growth, but it also didn't do crap for a decade after the dot-com crash. So I don't want to be stuck in what might be like an ugly dead capital position. But do I think there's defined risk trades right now to make some money if it goes back up? Sure. I mean, where would I see it? I would trade long Microsoft defined risk towards like the probably 425 to 450 area. I think that's safe. You can obviously be long if you want to try to get back to highs again. But I mean, to me, this is looking like if this is about to form a topping pattern, then here it is. Left shoulder, head to neckline, right shoulder. And if it rolls over again, we get back to the neckline. And if we break that neckline, we go to symmetry. We're talking back down to 2022 lows. And then you can own Microsoft at 50% off. Great. But is it still the same company at that point? I don't know. You know, this just got to be a trade. But and this is why I continue to trade indexes way more than I trade individual stocks. I don't love owning individual stocks because if you give an individual stock, 3 to 5 years, you're lucky to have this thing still be like as good and as dominant. I mean, we have been super, super spoiled with basically 4 to now 7 to up to 10 stocks that have carried this entire market a long ways for a long time. And if this is all starting to sink in, like this is going to change. This disruption is very real. So, on paper, is Microsoft a good company? Of course. Look at it. Microsoft, fair market value, discounted cash flow. These valuations have changed dramatically. Watch. MSFT. Microsoft. Snowflake is fantastic, right? Insider selling doesn't bode well for a lot of stocks right now, which we've been seeing. Price to earnings has been adjusted. This was a 30 times price to earnings near all-time highs. Now it's 22. Okay, it's on sale, kind of. Okay, what's fair market value? $450. We're trading at 365. Could we go back up to the highs again? 450 was fairly valued. That's still not all-time highs. But do we get beat up to the teens price to earnings wise before we make our way back into the 3 to 400s? I don't know. But I think you have to look at the big picture. If the S&P cannot create a rally, Microsoft isn't going to do it by itself. The Mag 7 needs to step up and show that it's willing to do something solid as a stock or as a sector. Mag 7 is kind of its own sector. It's top 10, huge market cap companies. This as a ticker, just going to Mags. If this fires up a rally, I mean, we are at the take this low, take this high. Look at the weekly. Okay. This low, where's my other fib at here? It's in here somewhere. They get it on daily. Yeah, it's right here on my trend line. So this low, this high, we are at the 38% level. We could fall to equilibrium on Mags. Okay. Could we find this, bottoming out, having some, buy the dip on Mags? Maybe. Microsoft benefits from that. But I don't know. Part of me is thinking that this this market breadth is going to be maybe the market's idea of flushing. We get down, I mean, there was a low right here. Okay. Maybe we're doing the same type of thing. It's not quite going to be the extreme of like 11% on the market breadth. But it's got to be getting close-ish, I mean, it's hard to say like, oh, that's capitulation. It's got to go up. It doesn't. The market's been like slowly grinding and chopping and fighting and fighting. Once we broke below 6,800, it's gotten a little bit more lopsided to the Bears. The Bears have won a lot. We're down, less than 6,400 right now. So the Bears have won a 400-point breakout that the Bears have mostly dominated. Okay, market breadth has deteriorated in a big way. I could see this offering a short-term rally on everything. That's good. Okay. But if I'm going to get long on anything, I'd like to see that the overall market can also support it. And not just say, well, Microsoft's down 35%, looks like a great buy. If the market keeps going lower, Microsoft is not going to be the only stock that goes green. I hate to say it, it's going to fall. So I just think everything right now is like, we have to kind of assess the big picture and see if we have an opportunity for the bigger market to rally. Yes, you can anticipate. The nice thing about options is you can trade out of the money. You can trade probabilities. You can trade the higher implied volatility in Microsoft and go way out of the money and have a high probability profit. But what's plan B? If the market still sells off and Microsoft still sells off, are you willing to own the shares and try to repair it? I would if it was cheaper, but I don't want to be stuck at a 365. Microsoft is going down to $220. I'd have to have a backup plan so I can do something like a collar trade. If I own the shares, do a collar trade. Sell a call, buy a put. If it goes up, gets called away for a couple bucks, make some income. But it's protected to the downside. That's the one way to kind of sleep with a position at night and know that you're not going to get in a lot of trouble. Interesting to think what the market would be. 200? Oh, I know. I mean, look, there's a lot of damage that would be done to this market. If we're starting to see, 30, 40, 50% corrections in Mag 7 stocks, that's really bad. I mean, again, we're still talking a single digit correction in the S&P right now. 9%, which is not nothing, right? 10% are always like pretty healthy corrections. But I would say off the 10% correction, if we have a 10% correction, I mean, even today's candle, is anyone convinced of like, oh, this is bullish? Doesn't look bullish. It's an indecision day. Nice part is so far today, we opened here. We're fighting back. Our daily profit play trade should be looking pretty good for that $240, which is nice. Could I pull away my defense trade and maybe sacrifice a little bit of that? Sure. Let me go down. I could probably save myself a bit of risk on that dollar butterfly. I paid $1 for that butterfly spread. It might not be it might not be needed right now. Good Lord, I put a lot of trades on this morning. Okay, so $1.20, 65.20 and 35, 63.35 and 20. So this is a DPP. That should be filled for $1.20. Then I have the 25 by 40 and the 30 by 15. Okay, make sure I got those correct. So these should both be filled for $1.20. Yes, $1.20. Okay, so those are my daily profit plays for this morning. Right now, of the $2.40 of max profit, I'm up a whopping $50. Not even $40. Cool. I need more time. Okay, what else? Defense. So I'm probably not going to pluck the defense away right now. It's 11 o'clock. We're an hour and a half into trading. I still have a long ways to go to get that time decay. This one for $1, 63.25. That's a buy put. 6,300. That's my sell 2 in the middle. And then 62.75. This is a 25, 6,300 and 75. So 25 wide butterfly spread. So butterfly 25 wide. That's defense. And then I have those small broken wings for 5 cents debit. 63.05 by 90 by 65. And 90, 95, 80, and 55. Okay. So my day looks like this. Daily profit play for $2.40. Butterfly, it's $1 that I might be sacrificing the entire amount. Still helps me make some money. I'll make $140 on the day. Broken wing butterflies, if I throw away 5 cents on each of those, I'll make $130 on the day. It's trading. Would I net positive profit on the day if the market stays within the expected move? Yes. I'd like to, maybe peel off this 25 wide because I'm only down about $45. I could save myself $50 there, still make $200 on the day. But then I have no defense in case things go down. Look, this is just an executive decision I have to make. If we're not going to go down to test my expected move lows, then obviously I'd like to pull off that defense trade. But if I'm going to say, look, I have $5,000 worth of defense down here if I need it, versus the risk of about $2,700 on my daily profit plays. So if the market is starting here and just kind of hanging out with like a nothing burger day, that's good. I just want to make sure that I've got defense where I need it. Because my mistake this morning was I put my puts a little bit higher than I wanted to, and that's okay. because I just had to pivot to play more defense. So I'm going to keep it in here. I'll still make about 140 bucks on the day. That's okay, you know? And if things get a little nastier towards the end of the day where we fill this gap or we go lower, well, hopefully my defense is enough to help me wash away my risk and make, a little bit of dollars on the day. If I wash away my risk where instead of risking $2,700, I lose less than, 500 bucks on the day, I consider that a win. I can obviously make that up in no time at all. But if my $2,700 in risk can end up giving me up to $5,000 in profit traps, I might get very lucky on this defense that allows me to make some money on the day. But TBD, time will tell. Okay. Pete, what'd you do there? SPX 63. Is that a 6250? Are you going you 50 wide on that, dude? There's on a week right here to be a good close. 50. Okay. So is that an Iron Condor 50 wide? 6350. Yeah, that's gutsy, man. Participation trade, would it be everything? Sarah, you talking about engineered options? Engineered options, all those trades are GTC. All the good till canceled. Yep, every single one of them. So when I put them in my platform, they're always pending good till canceled. I haven't been filled on one yet. Okay, not sure how big that new IPO. I know, and they will be big. The IPOs on Anthropic and SpaceX, if those get passed through, and I think they're trying to push them through pretty fast. You want to know who's going to make a lot of money on those? The underwriters, your JP Morgans, your Goldman Sachs, whoever is signing up to get their little dirty mitts on SpaceX, for example, they will make a killing on those. So that, and again, there are so many other pieces to why it's hard to be a bear. You know, I just think there are plenty of reasons for the market just to wrap its head around something optimistic. Even right now, if the market is going to fall and we put 9% damage in the market, all it takes is remove the noise around Iran, say that we have victory in some way, shape, or form. The market's going to like it. Market's going to rip. It's going to repair. It may not take out the highs, but the market's going to repair in a pretty big way, I think. But we don't have that yet. So to try to trade on the assumption that like Trump's going to fix it, it's like you don't freaking know that. And when he does fix it, he did it last week. He fixed it on Monday, and the market faded it all week. So you can't go into this like long term stuff. It's like you fix it, you have like a 0-day short term play, and we'll see if price can follow through. But right now, it's like we are kind of in a 0 DT dominated world where the market just is taking like single day bets. And that's a good way to minimize risk and exposure. It's also a way to, kind of maximize good process and profits. So I'm just, like I said, in the big picture for me, I'm just trying to limit some of my overall exposure. If I go through every one of my positions for my accounts, okay, here is, one of my margin accounts that, I mean, if I look, there's a lot of trades here, right? But if I look at all these positions, I own very few stock and most of it is way out of the money option selling, right? So am I worried about this? Not really. I mean, am I worried about, okay, I own some shares of Alcoa. Do I think it goes up to 80 bucks and makes me, $500 to $600? Yep. AFK is Africa. All the ETFs were hit are globally because the US is down. AMD, we're trading at $200. I have a $50 naked put. It's not profitable right now. There's a 90% chance of profit, and it shows that I'm still not making money on this trade. It's like the volatility on a lot of these underlines is why my account is showing red. I mean, again, it's volatility exposure. I get it. I'm beta weighted long. That's on me. But I'm always long in this market. I think you're crazy to be like market makers are delta neutral because it's their job. I think traders, you have to have a little bit of a long-term bullish bias. I mean, look what the market's done for a century. It's gone up. Every gap to the downside has been filled because we go up to all-time highs. But it might take time. We might need to repair. I just think there's still things in 2026 that can give us a reason to stay up near the highs, maybe get to the highs. But, this market clearly has priced in a lot of good things. I think that's what I'm trying to take away. It's like a lot of good stuff has already been priced in. And right now, what the market is not loving is the fact that the Fed might be raising rates. in this wake of inflation. If oil is going to be sustainably at $90 to $100, that's going to be problematic. But I don't know. Is there a fix to all of it? I mean, we seem to think that Trump has all the answers, but I think, look, he didn't control the market last year. He pivoted hard. It was a self-induced, violent, nasty fall for Liberation Day and after, but he just pulled it away, right? He said what we're going to do is tariff and tax the world, and what ended up happening was we didn't. We blanketed it, but we went from, these insane numbers of like 30, 40, 50% tariffs to like 5, 10. Let's do a deal, you know? And the market caught onto that very quickly, which is why we had 8 or 9 months of rallying after April. Here we are, where that's already been priced in. What about the big beautiful bill? That got priced in last year. What about the Fed cutting rates? That got priced in last year. What about earnings? That got priced in last year. So the market has to have this like renewed sense of positivity or optimism for us to even maybe sniff all-time highs again. So it's going to be a volatile year. We've already sensed it. We've already gotten a sample of it all year long so far. I mean, we're 3 months into trading, and it's been a roller coaster ride in 2026. Has it been easy? Not really. Has it been fun and enjoyable? Not really. But I think we grind it out. If the market's going to be down 10% and I can finish flat for the year, I'm okay. I don't want to finish flat. I don't want to lose, but my goal is to try to make money. So I just can't give myself like this week to make money. It's like, just give myself time. Keep trading. Plenty of trades ahead. Have some cash and dry powder to do it. We'll be fine. Okay. I like that, Pete. That's solid, dude. That's a little tight though. 63.50. That's a little tight. But, so far lows around 71. I'm looking pretty good. If you did that right around the expected move, not bad. You know what? Really quickly, let me do this. Since I'm not doing a webinar today, I've got class at 11:30. Let me do one thing. We can get more into this tomorrow. Let me go option Omega. So I'm going to add, somebody asked me over the weekend on an email if I would prefer to have option Omega for the modeling or option strat. And it's cheaper for me since I already have a membership to the backtesting side of option Omega. It's only another $300 versus like 4 and change. I think it's like 440 or 450 for option strat. So I'm going to add the modeling component to my option Omega. But what I wanted to do was let me run a DPP here, which we played around with a little bit last week. So daily profit play, let's just do this thing every day. And let's run the numbers here. So we'll go current data. I'll keep the iron condor. What I wanted to look at here was, this is fair, like a 20 delta, and then we'll go strike offset. It should be from the parent, I think, right? So the call side should be a +5, and this should be strike offset should be a -5. But I want to make sure it's off the parent offset and not. So this is my sell call. I want to go 5 points higher. This is my sell put. I want to go 5 points lower. 0 DT. What I was going to say on the minimum credits here. There we go. Minimum entry premium is $2.50. We'll go daily. So I'm considering a trade where, let's say we use the expected move, which is typically around like a 20, it's like a 23 to 25 delta, usually. Okay. If I did this trade, so if everyone's looked at my broker platform before, when we go to something like SPX, so look at this tomorrow. Type in a wire yes in the chat if you can see this red dot or this red area. This is so the strikes are going up in value and going down in value. This is the expected move right here. Okay. So what I wanted to look at is if I put my trade right around that expected move. So this would be a call side of, let's say I'd sell the 70 and 75. And on the put side, I do a 63.05 and 6,300. Now, right now, this is trading for $2. What I'm saying is, what if I can get filled for $2.50, make this trade a risk of 1-to-1, and now I take away all of the power of a daily profit play that has backwards risk to reward, right? So I am not going to get filled on this trade all the time because clearly the market most of the time is going to stay within this expected move, right? Most of the time, this is going to stay inside the expected move. So the odds of getting filled at 250 is pretty slim. But if it is getting filled at 250, I'm only going to lose a 1-to-1, which means if I win 55% of the time, 58% of the time, 60% of the time, I'll make money. And we can really simplify this strategy. So let me see if this will work. I'll see what the strike offset looks like. We'll go for a minimum premium of 250, and let's just go after like the full profit. Let's just let it cash settle. So there's no stop loss, there's no take profit. Let's just see if it'll cash settle into winners for us. Early exits, not really. Let's just go. All right, let's run it. Yep. And Don makes a great point, but he's also the commander in chief of the biggest country in the world. So, we elected him, and I'll give him props for being active and vocal. But I mean, there are people that clearly it's like we got to throttle something back, and I just don't know what this. I don't know what this plan is. I feel like right now, this is not a feeling of like an America First agenda. I'm not sure what this is. I think this is a I don't. I think there are outside influences that we see like an impressive amount of leaning into Israel, and the U.S. is acting as an ally. But we have had hotspots in the Middle East for a long time, and it's always been an uphill battle and mostly been a losing battle. And I'm not sure if we can just go in and tactically do this. I also think that they played around with AI like they did with Venezuela, and they try to put in something where like, hey, look, this is the perfect plan to go in and strike in the Middle East and get what we want, and it's clearly not playing out that way. Are we that silly where it's like we think the AI is going to give us the perfect flawless plan to follow and execute? I mean, we're already what 3 weeks into this conflict that could escalate, but I think this stuff has to be done in like the next 30 to 60 days to say that this isn't a war, this is a conflict, this is a skirmish, but not happening yet. Insufficient margin, that's not right. Exact DTE. Let me go back to test this thing. What's going on? Sell call, buy call. Hang on. I guess let me see if I can just build it from scratch. That is strange. Anyway, I'm not going to sit on this too long. I'll try to figure out if I can run this test. All right, chart alarm's going off. What is it? VCX crossing 100. Oh my god, dude. VCX is getting hammered. Look at this thing. Yikes. All right, well, the pump and dump that everyone thought it was is materializing. Jeez. So my $600 at $300 is not looking good. I do have a pending order at 55. We'll see what happens to that. So I bought it at around 313. I have another order at $55. I will let this thing ride. I don't know if this is going to be up to down to then maybe trying to get back up to these highs again. If I miss the pump and dump, then I guess I'm going to be down about $1,100. But I'm not sure yet. But wow, what a crazy fall, huh? Well, that was fun for a second. What's the other one that I was in? I think it had PPTA. That's Perpetua. So I'm in this one long. I bought some shares. I'd look to take profit here on like 36 to 40 bucks. I think I've got some other ones. DXYZ. This is another one that plays out similarly to VCX without nearly the same amount of volatility and a lot more history. So we're seeing some support on the 20 handle. There's no options on this one. So if you like it, you're buying in. I mean, this looks again enticing for risk capital as it goes to zero, but if we get to these highs, that's up 182%. Not bad. And then I was reading something this weekend on Freddie Mac and Fannie Mae. They're cheap. I just don't know if I really want to play those ever. I think 2008 made them rough to say we're going to own. Double-edged sword, coin flip. I mean, yeah, if it goes to zero, that's what I said last week on the risk. I was on the profit panel with Alex and Jeff, and I said if it goes to zero, like that's my risk. I'd be risking 0.4% of my account. Okay. So let's roll the dice. We'll see. I mean, it's not done, but yeah, I mean, after it was halted, I really thought like when it was halted, I'm like, we'll have another couple of days of pumping on this thing if we have the halt. But nope, I guess it was just like, that's the top. So, all right, we'll keep an eye on that. Now let's set some chart alarms. I guess back at, I don't know, let's set chart alarms back here at like $500. See if it has any interest in going back up there. Oops. I'll set a chart alarm back down here at $28 and see if it comes all the way back to where it started. Okay, so for today, what's going on? Daily profit play, pretty chill. Despite the crazy volatility, we've had some 40-point swings already. Market opened. We dropped about 47 points. Market rallied up about 40 points. It's back down. It's flat. What happens for the rest of the day? We have a pretty big transition zone. If we can get above 6,400, there's room to get up to about 6,450. I said that JP Morgan collar is 64.75. There's a lot of hedging into that, especially on the put side. It's like, I wouldn't be surprised if, today, tomorrow, the market makes an attempt to try to get there. That little open, is that it? I mean, if that was the attempt and it's like, well, we got to, 64.20. I don't know. Maybe that's the attempt. But if we make a more valiant attempt, later today to have the market rallying up or even into tomorrow, we do have some profit traps sitting here. So that's what we'll get after. All right. I've got class in 8 minutes for waterfall income. The good thing is the market's down about 8-9% already from the highs. If we do another 10% lower, we should be in pretty good shape for waterfall to again, if you're with me, stack up another trade, which I'm going to. Okay. We'll build out a profit trap. I like waterfall strategy too. This isn't a time necessarily to say I'm calling the bottom. If you wanted to swing trade, I mean, we could talk about a swing trade with strategy one, because if we're going to bounce anywhere from this 9 to 10% level, I mean, we need basically 30 to 45 days to see if we bounce. I still like the May expirations, the June expirations. We'll kind of kick it around in class. Then after I wrap up waterfall income, okay, after waterfall income, I will go into probably a quick video just so I can send this out. Maybe I can do like a, let's say 10-minute video for engineered options, just reviewing all positions that we have. We've stacked up some defense trades for the end of the month. I put in some broken wing butterflies as bonus trades. I have, I think, 6 trades open right now for engineered options that expire tomorrow, right? They have been in trouble because the market is down almost 7% for the month and we're sitting near the lows. So if we don't show any type of defense to get off these lows by, 50 to 100 points, we're going to take some losses for engineered options. And that's fine. We're still positive on the year, still positive in the service. But I did stack up trades, and if I lose, I lose. I will get right back in and trade for next week, and I'll put out new monthly trades as well. I'm still going to grind. Okay. Pete says in Philadelphia, VCX is worth $19. Cool. Well, then I look forward to parting ways with my $1,100 if that's the case. We'll see what happens. All right. Let's do that. I'm going to wrap up class here for today. I have a couple things. So waterfall income class coming live at 11:30. Look for a video update in the Telegram channel for engineered options. If we get a chance to de-risk and de-leverage, I'll update some of those trades. I know we took some of those energy plays, XLE, XLU, XOP, and XOM. Those are all plays in Project Options Edge. If I peel those profits off, we'll update those in the tracker and in Telegram. What else? Expect a move box if you want the indicator. It's continued to work, really well. It's a nice way to get a visual representation where we should be every day for daily profit play or whatever time frame you want. There's an 18-minute video on how to use it. It's $20 indicator. If you want it for $20, I'll give it to you. Send me an email. chrispulverpub@gmail.com. Okay, chrispulverpub@gmail.com. Send me an email. Ask me about the expected move box, and I will send it your way. What do you got there? Oh, Trading Places. There you go. Nice. Love that movie. Little Dan Aykroyd, Eddie Murphy. All right, let me figure out this. I'm going to try to get that premium at 250 and do a little daily profit play. I want to try to get the parent. Let's go. I know you can set this up. differently. Let's do a new back test. All right. I'll mess around with that. Sector stuff. Market for the day. Can we break the high 64 and change? Pivot around 64.50. See if we get there for the day. Gap fill around. I'm just keeping an eye out for that 64.75. It'd be nice to see a 64.75 to 6,500 level get hit this week. That'd get us some profit trap material for tomorrow. Cool. All right, everybody. Let me take a small 5-minute break. I'll be back for waterfall income. See you in a few minutes, and then look for a video update for engineered options. And we'll continue to grind for the day. 3 p.m. I'll have a live webinar. I'm going to do a daily profit play live webinar at 3 p.m. if you'd like to join me. Okay, talk soon. Bye. Sarah, was that? I think I sent you an email. Look for an email from me. Let me double check something really quickly. I updated all. So I didn't get a chance to get my emails done last week, but I finished them all last night. I got everyone updated. So let me see. Sarah, yeah, you have an email. I do need one thing from you though. I sent you a confirmation email, but I need your proper ID for TradingView. You sent me an email. You're like, TradingView ID is right here. Go to the upper left-hand corner, and this is your profile. I need that, not your email. So give me an email back and tell me what this user ID is, and I'll give you access. Yeah, you should have an email from me from last night. Cool. Okay. Any other questions? We good on YouTube? Good on Zoom? Good on Twitter? Good on X? Good on LinkedIn, Facebook, wherever we're at. We're all over the place. So good stuff for today's session. Nice to be back in the home office. And I'll see you in a little bit for class. All right, bye. Did you finish your food? Huh? Did you finish your food? You jerk.